I've been wanting to talk to you for ages about what's happening with the tariffs and how that's affecting people. And because it's still going on and because the kind of craziness is still happening, it's like, what, how busy have you been over it?
The following the immediate sort of aftermath of the whole tariff story, caught it kind of re-highlights how markets trade. It was quite an interesting scenario, I suppose, a situation, because it was a really good reminder of why panic around financial markets and price action is really important not to be fearful of, because markets showed us the linearity of them. And essentially, when markets trade on a day-to-day basis through week in, week out, fundamental data, that when I'm talking about fundamentals, I mean like PMIs, employment, GDP, inflation, monetary policy, that moves currencies. Remember, think of currencies like the stock of a nation. It's like if you want to buy a stock in a particular country, buy its currency. Um, we had there was an immediate strengthening of the dollar, but that's because simply when markets panic, they'll come away from risk assets. We call it risk off. So risk assets are equities, and they'll take funds from equities and move them into safe haven assets, which are bonds, fixed income, um, like government bonds. In the main, it's US dollar government bonds are the typical go-to safe haven. So when you have a flight to safety in the event of a kind of you could arguably call it a shock, then funds come out of stocks into bonds. That's why we saw dollar strength. Then, as the market started to digest the whole tariff theory and what was happening and the impact it would have, that safety moved from US to Swiss government bonds. So we saw a weakening of the dollar and a massive strengthening of the Swiss franc. So again, when you can interpret this and see it happening, it stays very linear and it stays very much within parameters that we can forecast and we can see. And now the markets have kind of reformed the pre-tariff days, if you want to call it that, and they're now sort of very much back on the sort of trajectory that they were originally on. And actually today, I think we've seen GDP was better than expected for the UK. So again, that's underpinned the pound. That's why we've seen a small sterling rally, and it's carrying on its trajectory. But
So you've kind of got like individual countries just sitting there going, huh? What's this guy doing? And like people
yeah,
outside of that watching, reacting, and going, "Well, my God, I didn't see this coming." And yet, I remember sitting in the motor a couple of weeks ago, and we were like, it was day after the kind of like the first big kind of hit, and it was like, no, I've got to get going. I've got clients that are worried, and I need to talk to them. I need to talk to everyone. And we both sat there. We both kind of went, but he's going to do something else again, and he's going to do something else again. Then he's probably going to take. We actually kind of sat there and just predicted that, well, this ain't going to last. It's going to get worse, then it's going to get better, and he's manipulating things for his own good. Is that? It's kind of what we were talking about, right?
yeah, and like I think I've probably mentioned to you before, there are these sort of live streams that you can watch on YouTube and the news sometimes, that from the White House, it's very interesting because it's him with his advisors and signing stuff and talking at the same time. And I've just found the rhetoric really, it's interesting because he does it. It's almost like a social media led office, but more importantly, it's like he makes it up as he goes along. Now, I think that what happens is he tries things out. He tries a theme or a course of action, rhetoric, whatever, and sees how it plays, and then alters course, and that causes uncertainty. But I think what I feel like, since the beginning of April, whenever it was that it all started taking place, the market's kind of lost. It's kind of not that I had faith in him, but it's kind of, it takes what he says, I think, less seriously, depending on how big it is or how antagonistic it is, whatever it may be. I think he's lost a lot of credibility through this whole tariff thing, especially as he went tariffs. Actually, no, we're going to change it, and then he whacked up the tariffs for China, and then changed them, and then he put a delay on them. And markets hate uncertainty, But actually, what's really interesting is how unreactive or unresponsive they've become to Trumpisms and Trump rhetoric, which I think is really interesting. I think
But
that
this
that
this is
really, yeah,
when you
shows.
have one person kind of like impacting it in such a, because it was quick fire, right? It was just like, oh, it's like it's like when you're dealing with an ego, the speed at which they can work and the speed at which social media works. In the old days, obviously, this would take ages to get out. And
Yeah.
let's say the old days, 20 years ago, it would take ages to get this information out, and you'd think about it, and then it'd publish, and then it would go into print, and you might get a news broadcast that picks it up, and then they'll talk about what happened yesterday. But there was a delay. There was always a delay. So, yes, the markets would kind of pick up on it, but there wouldn't be the panic because the general population wouldn't react. So
Well,
you kind
news
of
is
get
real
this.
time. It's a really important point, especially when it comes to analysis, is that news is real time now.
Yeah,
That which is why, I think even the way that we receive and digest news is really important. You have to view news real time because if you wait for print or you wait for to read, I don't know, whatever it may be, however you're, obtaining news, markets react like absolutely more real time than they ever have done before because they are so in the know const- all the time. So it actually makes them more efficient from a point of view of you don't get these delayed factors and this delayed shock in terms of how things change and how the environment obtains and digests things. It happens instantaneously, which is actually much more helpful. Um, and it also makes the analysis of them much easier. Signals, for example, on if you're looking at chart analysis, for example, are much more I think are much more reliable because of that. But you're right. It's the market reacts and then recovers much quicker than it would have done in the days of print or however else the news is being obtained, especially from an institutional point of view.
Also the thing that kind of like just dawned on me is that this happened so rapidly. It was
Mm.
only what 3 or 4 weeks ago when we sat down and we were having that chat. And so if you'd gone on holiday, obviously we're self-employed or we run our own businesses, whatever. People who can't turn off because they actually have to be
Hmm.
connected all the time,
Hmm.
of kind of watching these shock waves kind of going on. But anybody who just lives a normal life, just carries on normally, say they went on holiday for a month, you almost wouldn't know anything had happened. If you went off, do you know what? I'm going to go hiking in the pool. Obviously, that's not necessarily a normal thing to do, but you go hiking in the pool, you're a month off of the internet, you're a month away from news. You come back and you're just like, right, everything's the same as it was, currency is about the same. But then you actually look at what's happened in 4 weeks and you're like, sorry, what? What? And it's almost like the rate of change, the speed at which the change has happened is it kind of feels catastrophic, but
Mm.
the thing that you've just got like hit upon, which is just like, well, it isn't. It's like, well, it's kind of linear. Yes, you might have shockwaves, but it just kind of all plateaus at the end of the day. That things have to kind of like follow a trend.
They follow
So
very
whatever,
clear trends always, and it's always the magnitude of the rate of change within that trend that we're analyzing, and the time frame over which we're analyzing it. People often say, "I need to buy some, I don't know, currency, euros, dollars, whatever it may be, and I need to set them on Friday in 3 days' time. What should I wait or it's like if it's inside 3 months, it's noise. It's just noise. I can give you an indication. 3 days, forget about it. It's just noise. That's just. I mean, who knows, right? Um, we can only look at overall trends, and actually, the longer the trend, or the longer the time frame, the more accurate the trend, the more stronger the trend. So that, yeah, when it comes to the panic stations that markets face when Trump talks about tariffs or whatever else he's going to come up with next, we must always calmly take a step back and look at, okay, well, that's fine, but how is that affecting the trajectory of the market as it existed before that was released? And we can do that across all markets, stocks, bonds, FX, commodities, whatever it may be. And that's how we get a real read on the the state of the market or the feeling of the market and whether it really is panic or if you look at a Brexit or a pandemic situation, that's panic, that's proper. Whereas markets are often saying, whatever the news may be, they'll use it to sell fear into execution. But actually, interest rates are a really good example. People buying property often, and this I find really fascinating. People buying property will often say, "Well, I'll wait till interest rates come down so I'll get a cheaper mortgage." It's like, yeah, but when mortgages come down, demand goes up. So you've netted that off anyway. Markets are efficient. They've never been more efficient from that point of view. So they and I'm really fascinated by, excuse me, I'm really fascinated by that that theory that how markets affect each other. You can't just sort of go, well, yeah, when mortgage rates get to 2%, I'll buy it. It's like, yeah, but then you'll pay 50 grand more for the property you would have bought when the markets was when the rates were at 4%. You know, that's what market efficiency is, and that's what people forget to remember.
There's another element here, which is the kind of touched on it just now. Where you've got this guy just going big shock, and then I'm going to roll back, and no, I'm going to go bigger, and then I'm going to roll back a little bit, and then go bigger, 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 and then I'm going to roll back even further, and actually come back to what it was before.
Yeah.
Eventually, people just go, well, so nothing has changed. You did this shortwave thing, but most people haven't been affected. Loads of people have earned money out of it. Loads of people have lost money in that short term. But anybody who just went, I don't need to do anything right now.
No.
Nothing's changed. The markets are going to continue that. I saw something from some Sam Instone recently, and he was just saying, well, if you look over a long period of time, this is where things are going, and why would that ever change? Yes, you have this, but this is where it's going.
Mm-hmm.
It's just So okay, you've got this guy chucking hand grenades. What you do is you leave him in his little room, and you let him chuck those hand grenades. And unless you have to do something, don't do anything at all. Just wait,
100%.
wait it out. So in terms of
100%.
because obviously you were, like I said right at the start, you've been impossible to get hold of. It's impossible to sit down for 15, 20 minutes. I appreciate golfers coming the way too.
Yeah, that's
But
the most important thing, by the way. That's the
yeah,
thing
of
everybody
course.
has to watch
Well,
that.
it's calm as well, right? Anyway,
Well, yeah, quite.
it's how have you been through this kind of period, in terms of helping your clients, talking to your clients? What's it been like for you?
I think that if people often say, oh, you're an FX business, you get me a better rate, and this kind of stuff, well, yeah, kind of, but actually that's not the problem I solve. The problem I like to think I solve is bringing that the calm reality to it, despite what the noise is helping people understand that it looks messy and it looks noisy and it looks chaotic, but most of the time it's not, and it's really easy to explain. It's really easy to show and help people understand. Financial services are really bad at utilizing what they can sell as noise and chaos and fear to just get people to execute, but that's not the way it should be. That's not how anyone should have to. You don't go to a doctor and you know they give you panic to help you make a decision. I don't know, that's a bad example, but what I'm trying to say is that I'm busy, but I now am in a position where I can only where I choose to only work with people that really want the help or my experience, rather than I'm not busy because I've got 1,000 clients. I'm busy because I like to spend more time with the smaller number of clients I do have, and that's really nice. That's a really nice place to be. It's very unusual for my industry to be like that, because most of the time it's a volume play, right? It's like, how many clients can I get and how quickly can we trade them? It sounds a bit sort of self-serving, but it's the business model I chose to adopt, which I think is a bit contrarian compared to how the rest of my industry operates. But the busyness has come from that. It's going, well, it's busy from time spent with per client rather than having more of them.
Yeah. So I mean, it's something that aligns with us. So, like you mentioned Brexit earlier, for me, in terms of shockwaves, that's the one that was like, whoa, because it's an irreversible shockwave,
Yeah.
and you know that that's not going to get
We're still
overturned
feeling that
overnight.
now, right? Brexit still that's still a problem now. You know how that's affecting us. What, nearly 10 years on? I mean, we're no further forward.
And but also with that, I mean, obviously the currencies took a huge hit, and it's like, and there were some people like, well, we'll never get back. It's like, well, one day there will be a discussion about whether or not the UK should rejoin the EU. There'll be discussions about whether other countries leave the EU and like how the EU reforms and all of that
Yeah,
kind of
correct.
stuff. So it will that situation will evolve, but it had that significant hit where actually no, this is an irreversible decision, and I kind of at the time I was like, well. I don't talk about like my views on politics generally, through my business, because it's irrelevant. It's something that happened, and the impact of it is still being felt, as you say. And it's one of those things where, okay, well, let's deal with the facts as we got them. Let's look at things, and let's look at how a risk point of view, what we can do. And I wrote an article. I remember writing an article 10 years ago about, well, yeah, it is a leave vote, but how does that look? And it's like, well, actually, you had loads of articles out there, loads of like commentators and whatever going, oh my god, it could be, and it could be, and it could be there, and it's like, well, yes, it could be anything. We don't know, but what we do know is that right now, that the actual you kind of highlighted that, well, yeah, GDP, currencies, and all those things are kind of like measures of where we are, and that, well, that's where we are, right? Okay, so now we have to work from that basis rather than what we had before, because unlike with Trump's, like, well, this is a new base. We now have a new base, and actually, it's caused instability, which is going to have bigger impacts. And we actually saw quite a lot of stuff around 20. It was around 2017, and I think 2019, before COVID, where Theresa May would come out and she'd go, "Oh, we're going to do this," and then she'd backtrack and do something else, and then, "Oh no, it's going to be like this," and it's like you could see the pound just like woohoo, and it was like, but we don't know until we actually move into essentially, we are just doing these Trump shockwaves, but it was just over a slightly longer period of time. We don't know how it's going to turn out. And yeah, so I always kind of go back to that point in time with this, because it's fascinating how people react to it. And rather than just kind of stepping back and going, look, it's probably going to be okay, we've got almost this, so much of the world has gone to this thirst of immediacy, and like, yes, you do have 24-hour news and it is rolling, and like something happens overnight and you wake up to it and you then doom scroll for 20 minutes. It's like we have an obsession with it. And actually, if you, as someone who is, you know, my approach to doing everything is personal. It's taking time and care, and I don't like to rush. I avoid AI because I feel that it's just takes actually some of the joy out of doing some of the work that I enjoy doing. So it takes longer for me to do things, but actually that allows me to actually evaluate, sit, think, make more strategic decisions rather than immediate decisions. And while I get that some people during this period would have been transferring big amounts of money, they'd have sold their house. It happened around the time that the stamp duty thing changed. So there will be lots of like property sales going through, either buying or selling. And yes, those big hits in currency, I can understand the sheer scale of the stress of that. And there's actually not much you can do about it, because you don't know where it's going to go next. All you know is what it might be in. Like, it might be okay in a month or 2 months or whatever, but actually right now when you need to do it, sorry, it's just how it is. But there's still things you can do, right? For most people who weren't doing big trades or big deals or big currency conversions or big whatever, it's like actually going to step back from this and just wait. That's kind of like how I viewed the whole scenario.
Yeah, that's about right. I think that's always the way to view it. I think, you know, with personal transactions in my world, it's, you know, there's time isn't always on your side, so you don't always have the luxury of being able to wait it out or whatever it may be. Not often it's very much you are slightly at the mercy of the market if you're buying real estate or it's transfer of wealth or whatever it may be. You're quite limited in terms of market extraction. You don't, you know, you either make the decision to wait because of the exchange rate, but again, like interest rates, you wait till the pound gets way stronger to buy property abroad, for example, and you're just going to be facing more competition for that same property, so you're going to pay more for it. So it's like that. That's kind of the trade-off, and that's what I kind of want to try and. That's the sort of message I want to sort of send is what I do is much more about operational efficiency than market entry. But, you know, whilst I have a lot to say about market entry and help people decipher and understand it, the noise around markets really exists for capitalist purposes, to get people to
To make people money, right?
Yeah, correct. Basically, yeah. In terms
Like
of service providers utilizing that information to, you know, why do people feed companies and individuals with data and market news? And it's to create not a panic necessarily, but it's to create urgency. And when you take that urgency away, things become much easier to understand and much easier to interpret. And I think the client's experience is way better. I just don't see there as another way of doing it. Why would anyone want to be operated under duress to an extent, but really under a sort of state of panic or uncertainty? I don't buy that. I don't believe in that.
Well, and then again, it's something that we talk about to people a lot. It's like, actually, if you're feeling pressure from someone to make a decision, ask yourself where that pressure is coming from.
Correct.
So completely like almost a 1980s reference. The rise of the double facing salesman has just like appeared again. So I've got someone knocking on my door recently, and it's like, okay, actually do need windows. Not for this flat, but for a property I own. I do need windows. They need to be improved. Right. Okay. So talk to me about it. And Jason's like, but if you sign today, you'll get this special price, but tomorrow it's going to go up. It's like, well, that's a
Yeah.
bit arbitrary, isn't it?
Well, yeah,
Because
correct.
I've said come back tomorrow. So are you telling me that if I come back tomorrow, it'll be more expensive? It's like if you just take a little step back, if you just analyze the situation and move away from the panic and go, well, I'll take my chances then. If that's all right, I'll go and talk to someone else.
Yeah.
It's like you take away that threat. And once you take away that threat, you actually see things for how they are. And then you actually get to evaluate, think about it. Okay, what's the risk of doing this now? What's the risk of going this? How does this break down? And by the time you've done that, you've gone, no, they're just pushing something that it's not in my best interest. They're
No,
trying
exactly.
to deceive me. And once you get that feeling, it's really hard to shift it. So I don't understand that philosophy because it's not in it's not in the person who's buying's interest. It's not in the person who needs something's interest. So you end up in a situation whereby you create this distrust when actually we live in a world where, yeah, we can all survive this. There's plenty of money to go around if we want it. And the panic is the thing that just causes money to actually go to places where it shouldn't probably go in quite the same margins. You
Yeah.
pay for what you get. You pay for what you need, and then you don't have to worry about that panic. So yeah, it's
Agree.
and also that becomes stressful. Like that in itself, like the whole thing about E3 is it's we're trying to help people reduce their stress. Well, panic buying is stressful.
Yeah,
Reacting to
totally.
things is stressful, and that leads to bad decisions. So if you take away the stress, you can have a better quality of life, and you can make better decisions, and you
Yeah.
can lead to healthier outcomes
Yeah,
on
for sure.
purchases or transactions or investments or whatever.
100%.
So yeah, that's kind of like I've been watching all of this and just going, my eyes have rolled so quickly. I swear, other planets and things have moved for the sheer gravitational force of the eye rolling that I've been doing, and it's
Yeah.
just because we don't need to do anything.
No, no.
We can just wait, just wait.
Completely agree.
Yeah,
Yeah.
cool. I've really enjoyed this. I've really enjoyed chatting to you, mate. And let's
Likewise.
do it again.